What up, what up, what up, what up, what up, YouTube? Welcome back to another major market breakdown. As you see on your screen, we're going to be doing a lot of focusing on oil in the next coming couple of weeks. And I say that just because, with everything happening, we see that we've gotten this like slight market manipulation here, just because fundamentally we know that oil is supposed to be going up. We're in a trade war. It's just now with what Trump announced towards the end of the week, last week. Now it's more like full blown trade war. So we should start seeing some bullishness come back into oil. So what I'm gonna look for is this low here to get broken one more time, and then I'll be looking to go ahead and get in. Now, if this low doesn't get broken and it just decides that it wants to scoot off and start buying, then we'll just find a pullback kind of entry to get in. So that's mostly a fundamental trade. There's technicals that's going to play into getting into the entry. Like I said, I want to see that low get broken first, see if we can't get the best discount possible, but a lot of this is going to get caught in the way. This will be our first target right here, and then shoot, depending on how long this could go, and I'm gonna go into some details about actually let me go ahead and send it to myself so I can pull it up on my screen towards the end of the video for y'all. But we sat down and did some projections for the future as far as like the economy as a whole. So we're gonna talk about that a little bit towards the end of the video. But before we get all the way into it, if you're gonna get some value out of this, if you usually get value out of this, go ahead and hit that like button, hit that sub button, and that bell icon. It really helps the channel because it tells the algorithm that this is good content and it needs to be pushed forward so other people can see it. And don't be a gatekeeper. Like, this is, you know what I'm saying, this is sauce. It's gonna help some other people get some good positioning in the markets. If you're an experienced trader, if you're a new trader, these kind of breakdowns will still be able to, help you capitalize in the markets. But without further ado, look at DXY. I actually drew up, this kind of looks a little bit crazy right now, but I'll explain it. I did some, this was a little bit, went into the projections for the overall kind of economy that we were doing last night with the team. And so let me explain it a little bit. So on market open, I'm kind of expecting, on market open, I'm expecting price to do one of three things. Now this tan line right here, I think may be our more viable option for how the dollar's probably gonna move, because we've already kind of caught this here. This little support turn resistance here. So price rejects off that, we'll go ahead and head towards this area here, and then back towards here, teeter around a little bit, take out this liquidity, and then actually go for the bigger drop. Now that move could happen within a couple of hours. It could really be just this space here where that happens. I just have it drawn out so you can really see the overall shape. Is that an ad? Is that an ad on my freaking? That's not supposed to happen. That is not supposed to happen. That is a fireplace. That's a fireplace on the screen. You're not supposed to put an ad on a freaking fireplace video. That's. I'm sorry, y'all. I know that probably y'all's probably like, what's going on behind him? But nah. So but since price is already in this little area here, there's a chance that buyers could keep it here, and then we go ahead and take out this liquidity, and then we go for the drop. That's without dropping down first. And then there's like price coming down a little bit, going to test out this support turn resistance, whatever you want to call it, area, then going down for the drop first, a mitigated drop first, as you can see, and then going to take out this liquidity, and then going for the overall drop. But as you can see, the main idea is the fact that I'm looking for her to give some type of pullback towards this area here, and then give us a bigger drop. So right now, I guess the move would be more of a buy than a sell, but I'm more waiting for the sell to happen personally. So and then it's gonna look like the reverse on euro. Basically the reverse on euro. I'm looking for the buy on euro, but what's probably going to happen is a sell first. and then that's gonna give us a good discount to go ahead and go higher. You know what I'm saying? And honestly, the only things that I'm looking to actually trade this week is that oil setup that we talked about at the beginning of the video. Since I'm kind of just waiting to watch these major pairs play out and most likely get in towards the next week. If not, I may take a late week entry if we're in, like, if we get in this area around like like Wednesday night, Thursday morning. I'd be willing to take a buy because Friday will probably start pushing us into profit. So I won't, close the week, holding any drawdown or anything like that. But that's really the meat and potatoes of the markets this week. Let me see. Can I just like bring that over here? Yeah, okay. I can do that. Cool. That's what I'm gonna do. I'm just gonna pull them all over here. Give me 1 second, y'all. That's the same one. Oh, I'll pull the same one. Okay. Don't pull the same one. Let's go. Prices projected. That is bilateral trade, and that is GDP. Okay. All right. So we're gonna start with the GDP impact. So let's share that tab. Make sure y'all can see everything. How you're supposed to see. Okay. Yeah. So this right here is a projected graph of three possible outcomes based on three of the most likely outcomes based on historical factors. We crunched a bunch of numbers. GPT had a say so. Wanted to tell us about something, but I want to say like every chart that I'm gonna show you, just because we're getting it done kind of fast as far as like we crunched all the numbers on and like within like some messages and whatnot, and the infographics were put together kind of fast. So just to let you know that on this chart and on the other two charts I'm about to show you, the numbers are slightly different, but like just imagine they're right now numbers and you'll see what I'm talking about. All right. So as far, well, except for the GDP, the GDP is relatively the same. The other two infographics though, like the price of gold, it says on the infographic right now is at 2,000 and some change when it's 3,000 and some change, so it's $1,000 off, and it says that Bitcoin is at like 4,000 or 400,000 when it's at 100,000. So it's just it's just the numbers are shifted, but the graph patterns are how we predicting the be. So without further ado, we're about to get into that. So the projected GDP impact percentage under different trade war scenarios. So the first one is a cold trade war that can last anywhere from the next 5 to 10 years. All right, now that'll be basically like this high level inflationary trade war that has both of our economies, both us and China, losing GDP year over year until about 2035, when we figure something out. Now the second and the strategic decoupling. Now before I mention that, the cold trade war, like that is the most likely scenario. It's about like between 60 and 70% likelihood to go that way. Now, what I'm saying, you can quote me on it if you want to. I don't really care. That's why I'm doing this, to kind of give y'all more context on the economy as a whole, not just the trade stuff, because I want to kind of bring some non-traders in, people that just kind of want a general idea of what's going on. So this red line is the most likely scenario, and you're going to see that like that's consistent throughout all of these scenarios and conditions that we'll be talking about. So the strategic decoupling is basically like, instead of coming to agreements with China, because this is basically us versus China, you know what I'm saying? Like all the other countries are involved and whatnot, but like the us and China are the main ones butting head in this trade war. So the strategic decoupling will be us basically becoming less interdependent on each other. Like China is phasing out, even messing with U.S. products, and vice versa. U.S. is phasing out. We're just separating completely. Like You know what I'm saying? Like I don't like y'all, y'all don't like us, but we don't feel like continuing to do this trade war. All right, and in that scenario, that's probably the most that would be the best way to go if we just leave each other alone. You know what I mean? So you see the GDP have a sharp drop along with the more likely scenario. That's why I say, like, the more likely scenario, it starts off about the same for all of them. You know what I mean? So like we're gonna get a GDP drop off regardless because we started a trade war. But with the strategic decoupling, we start to see some type of gradual movement towards 2030 and 2032, where we start actually seeing our GDP go up. And the same thing will happen with China because we're just becoming less interdependent on each other, and we found other ways to do business without having to rely on each other at all, or go at each other at all. You know what I'm saying? And then the eventual de-escalation. Now that's gonna be this is recession. All right. Eventual de-escalation is we both go at it. We both go at it so hard that we send one or both of our economies into a recession, and immediately after going into a recession, we it's like, all right, somebody has to fold. You know what I mean? So this is in the case that there's an actual loser in the trade war, like somebody decides to come to the table and negotiate, and be on the quote unquote losing side of the trade war. Now in that case, it's kind of like the best outlook for our GDP because, like, the point is to bring somebody to the table. So this is the least likely scenario, but it is the best scenario for it's probably the best scenario for us. With depending on how fast China is able to get to net zero, you know what I mean? It'd be good for them too. But I don't, Chinese economics, as far as like their inter economics, I'm not super versed on, but I can speak to I can speak more to how the U.S. is going to do, and that's what we were doing when doing a lot of the crunching. So it's going to be, I'm going to say that it's for both economies and whatnot when I'm speaking on it, but it's mainly projecting for how the U.S. is going to do. But China and the U.S. do fairly similar. So on to the next one though. This one is, so this is our bilateral. Well, I guess. Well, yeah, I'll talk about. We'll go back into the like how is this going to affect your trades at the end of it, because that's the last chart. So this chart right here. Let me share this one. So this chart right here is the projected U.S. China bilateral trade volume from now to 2035, based on these different conditions. So if we have the first, most likely scenario, the cold trade war, you'll see that our bilateral trade just sharply declines basically to nothing. And in which case it's similar to it's a similar ending to the strategic decoupling. As you can see, they kind of move together, and then, but the thing is, with the strategic decoupling, we're choosing to go ahead and start like not doing a trade war a lot sooner. So that's why you see this graph kind of start going up while this one is still sharply going down, because we're deciding to continue having a cold trade war. You know what I'm saying? So this green line you see with the eventual de-escalation, if we just come to an agreement, come to some agreements, negotiate, figure it out for the betterment of both of our countries, then boom, you know what I'm saying? You see this sharp rise. But he has said already he's gonna fight this to the end. He'll fight any war. It doesn't matter what kind of war y'all want to fight. He's gonna fight it to the end. And Trump started it, so I think like just ego and alpha maleness won't let him come to the table soon enough for it to be an eventual de-escalation. You know what I mean? So we'll probably just be in this territory for a while. But I mean, like, from Trump won't be in office after 2028. You know what I mean? So we could see policy shift in this time that takes us in one of these three directions. Now, like, as you can see, like, we're going down. that's like, regardless of how it goes from this point forward, the economy does have to take a slight downturn. Now, how that will be looked in 2030 as a recession or not is going to really be based on if Doge is able to get something like a stimulus from all the money they bring back, something like that. If they're able to stimulate the economy a little bit, the way that they did, after COVID and whatnot, then we may not look at it as a recession. We may look at it as a time that we almost went into a recession, but then this trade war happened, policy happened, and we didn't. That could be how it ends up looking. All right, so and then the last infographic we got here, like I said, the numbers are a little bit messed up. As you can see, Bitcoin is not at Bitcoin is not at 40,000 right now. It's at like 80. But if don't really pay attention, well, I mean, the gold price is more so a lot more accurate, but I'll explain. With Bitcoin, I want y'all to focus more on the shape of this, and I want you to understand that the strategic decoupling is the only scenario in which Bitcoin becomes stagnant, and that's because we'll be looking to do so much new things that there's a chance, not a high likelihood, but there's a chance that with Bitcoin not becoming so everyday pay for things, peer-to-peer pay for things, and like peer-to-business pay for things and things like that, with it being more of a value asset, a value holding asset. Now, granted, it's like it being a value holding asset has brought a lot of people into Bitcoin, but the non easily day-to-day transferableness of it. I mean, it's pretty easy if you know what you're doing, but like the average person is like, what do you mean? Like, how do I move it from this wallet, that wallet? Ooh. And it's, what I'm saying? Like, it doesn't sound like the easiest thing to everybody. So that's what's, what I'm saying, kept a lot of adoption from happening. So just depending on how that plays out in the next, 5 to 7 years, 10 years is going to play into how, what the 2030 cross looks like, but if we have a continued trade war, then Bitcoin is going to just continue to fly. And like I said, that's the most probable scenario that we were able to come out with. And I know like the chart is a little I want to say it's a little misinformative. And like these are less misinformative, but this red line is a little, because there will be some volatile drops. It's not going to just shoot and never move back around. But we could get some type of scenario where we have like price moves very swiftly towards that 110. Into that 120 area for Bitcoin, and then we get a pullback towards something like 90K, which is reasonable with a run up like that from the 72K push that we're looking for. We're looking to buy more Bitcoin at 72K, not before, not after, right around then. Just to let y'all know. And that that'll probably give Bitcoin the room to go ahead and run up to look like on an overall daily, monthly time frame, a line that's moving like this. You know what I'm saying? And then when it comes to gold, just kind of look at these numbers as if this is 3,000. You know what I mean? 3,100, 3,200, 3,300. This is probably our most accurate chart here because of the long-term value of gold, and we know how investors treat gold. It's a lot easier to predict how gold will move with all of these scenarios. So you have the cold trade war. Of course, gold is going to keep, gold's going to keep running up. The strategic decoupling, gold's going to run up, but it's going to run up to a certain point because that strategic decoupling leaves us in peace times. So gold's going to stabilize and going to go back down to regular prices, but it's going to be held up at least still by the fact that it is still a value asset, you know. And then with the eventual de-escalation, that's recessionary and you know, de-escalating because one of our economies went into a recession. And you know, that I say that this, we wouldn't see gold run down too much in bad times, but if you have like times that are too bad, then you can see some sell-offs, and that's where our model is predicting, you know, a slight downturn, you know, at some point after 2026, just depending on, you know, depending on how oil is doing with the trade war. And like I said, if we're buying oil the way we're looking to buy oil, then there's a slight chance that, you know, gold will take some dips, just because, like, you know, there's a lot of investors that will take their money out of gold and put it in oil instead when there's so much going on. And that's where the model is bringing in that downturn for gold. But you know, eventually you'll see gold stabilize out. And even with the cold trade war, you know, that's the most likely that would be able to last, that our model predicts, is 15 years at the very most. Now, like, 20 years is a stretch, but that's if tensions get higher and we actually end up, like, you know, troops on the ground in Taiwan, like it gets really bad, you know what I mean? But the model doesn't really predict that, you know, all that's gonna happen. We're gonna reach some kind of conclusions within 5 to 10 years, and this will bring this chart, you know, back down to some normal levels. You know, I say, like, if we go to 3,600 or above, then the rundown median would probably be about 3,500, about 3,400, maybe 3,300 will be a healthy medium to come back to. It will be a healthy retracement after that, you know. So these are projections over the next, you know, over the next 10 years. And I really wanted to do this video specifically, like this part of the video specifically, because like I'm not just a trader. I'm not just an investor. I'm not just a hedge fund manager, but I'm also a economic speculator. I like to, you know, I like to put together numbers and factors and possibilities and figure out, you know, what's the most likely things to happen for the future. I like predicting the future. It's kind of fun. So I'm gonna do some more videos like this, you know, bringing in, you know, some of these other kinds of charts and data, not just the trading stuff, so y'all can kind of get more context and more overall gauge at what's going on. Because, you know, I'll pride myself on being able to see from a bird's eye perspective what's really going on in this world. All right, so if you got some value out of this video, make sure you hit that like button, make sure you hit that sub button and the bell icon, you know, so you get notified as soon as we drop videos. Because, you know, this is market economic stuff. You know, it's cool if you see it a day later, but it's, you know you're getting the most value out of it if you see it when it drops. All right, so like, again, I love y'all. Make sure you're kind to somebody today. I'm gonna catch y'all on the next one.